Hello everyone. So again, this is a very short recording. We are going to discuss how to analyze cash flow statements. So we have seen how to analyze income statements, vertical and horizontal. How do you analyze balance sheets, vertical and horizontal. We are looking at how to analyze cash flow statements now. So instead of going into very deep analysis, which means I generally follow a very simple rule. So for an investor, cash flow from operations is very important because as an investor, you are giving your money to the company and company is giving you back in the form of cash flow from operations, and all businesses are done for cash flow. There is not a single business except for non-profit organizations that do not run for cash. Okay, so cash flow is very important for us. Which cash flow? Cash from operations. So I have a very simple framework. So cash flow from operations should be positive. If cash flow from operations is negative, you are giving money to company and company is not giving you anything back. In fact, it is taking that cash flow somewhere from investors, more investors, or it is taking that cash flow from financing activities. So it is either getting cash flow from investments, or it is getting cash flow from financing to substitute that cash from operations, which is negative, and that is not good for you. You do not want company to use your money and not generate anything on it. So cash flow from operation should be positive. Second aspects that we look at is cash flow from operation should be growing. So there should be growth in cash. If the cash flow from operations are falling, it means the business or the industry is not very profitable anymore, so the cash flow is falling. So these two rules we need to follow. Cash from operations should be positive, number one. Number two, cash from operations should be growing. So I have a sample statement somewhere. If I can find it out. Yeah, so this is a cash flow statement of Puma. So simple analysis will be, we'll go to cash from operations, the end figure, not this figures. We are directly jumping to the end figures. What we are going to check? We are going to check this against our rule. So I'm just hiding this all, we don't require it, and I'm zooming it. So cash from operations in 2017 versus cash of operations in 2016. So is cash flow from operations positive? So CFO is positive. So it fulfills our first criteria. Second is CFO growing? So current year's figure divided by previous year's figure minus 1. So CFO is growing by 73%. So there is growth of cash flow from operations. So two rules, both of them are qualifying. So CFO is positive and CFO is growing. So that's a good sign for a company like Puma. So for your homework, you can look at statements from Adidas as well as say statements from Nike and try to figure it out. Thank you for your time.